Hey guys, welcome to The Writer's Journey. I'm your host, Lauren Moore, and with me is Kayleen Williams and our special guest, Chris Morris. Hey guys.
Hello.
There it goes. Tonight we are talking about taxes. This is an episode that, yes, I'm very nerdy for this, but I've been looking forward to it for like 2 years now. An episode on taxes. I've looked on YouTube to try to find an episode about authors and freelancers and tax experts, and I decided to make that episode, and that's what we're having tonight. So tonight we have on Chris Morris, CPA. He is my personal tax guy. He works with illustrators, he works with authors, he works with editors, lots of freelancers. He himself is a freelancer, and he himself has self-published. So he knows all the ins and outs of taxes for authors, taxes for freelancers, and he's here to answer all of our questions tonight. So welcome, Chris.
Hello, thank you for having me on. I'm really excited to be here tonight.
This is great. And Kayleen, you're looking really nice tonight.
Thank you. I just brushed my hair with the hot iron and called it good, because that's about how busy I am these days. Good.
Lauren, I'm feeling a little left out that you didn't tell me I look nice.
Oh, nice. You look lovely. I love the shirt. I actually have a shirt probably with almost that exact pattern. So we could be twinsies if you come on again.
Thank you.
All right, so just want to check up on everyone. How's everyone doing tonight? Eileen?
Good.
I'm doing pretty good. I did want to mention this. So since the episode with the managing multiple projects, in the back of my mind through that whole episode, I was like, gosh, man, that would be so hectic to manage multiple projects. That just seems like so intense. And then I cleared off my whiteboard, and I'm starting to write down, what I'm currently doing. And I stood back. I'm currently writing 2 short stories. I am rebranding a series and rewriting that. And I'm also fleshing out another new series. And it was just like, oh, I'm already doing that. I am like so into managing multiple projects, I didn't even realize I was doing it. So that's where I'm at.
I had the same experience. This week I'm working on 2 books. One's a nonfiction book, one's a fiction book, and I was thinking the exact same thing. That advice from the guys last week, that came just in time.
Oh, and in editing. I'm also editing a manuscript. I'm super excited. It should be fun.
Yes. I can't wait to hear about it. And then Chris, what's been going on with you?
I am mostly trying to recover from tax season right now. I know it's a few weeks afterwards, but I had my fair share of people. So I sent an email out to about 30 of my clients the end of March saying, hey, you signed up to do taxes with me, haven't heard anything from you, wanted to see sort of where we're at, do I need to file an extension? Most people responded with no, let me get my stuff to you, but like 9 people within 5 minutes all said, just give me an extension. But they're totally not expecting.
Oh boy.
So now I'm sort of playing catch up with them, trying to, even though there's a 6-month extension time, like, I don't know if you guys know this, and by the way, this is free. It's an extension to file, not an extension to pay. So you get the privilege of continuing to, accrue late fees. So I'm trying to remind these people, hey, just because we haven't filed your taxes doesn't mean the IRS is like cool with it. They're going to, charge you. So right. I've been pretty busy with that, to be honest.
Yeah. So filing the extension then for the previous year that you're filing the taxes for, you actually end up accruing even more fees that you have to pay. Is that what you mean?
Right. Or if you have a refund, then that refund will be less because there'll still be fees accrued for not filing on time.
All right. So file on time. Don't give yourself more things to pay for the year that you already finished.
Exactly.
Yeah, and I guess we should say right off the bat near the top of this episode, we are not trying to give official legal or tax financial advice. This is a conversation between two freelance editors, one freelance CPA. 2 of you are authors. I'm an author hopeful. This is a conversation together with the whole internet, but it's not to represent official tax advice.
Well, thanks for saying that. I was going to say something like that, something along the lines of your situation may vary, but these are guidelines.
Yeah, take this information as you will. Please talk to a tax representative.
Right.
But definitely, certainly things to keep in mind. You know, that you may or may not need to think about.
Yeah.
And disclaimer.
So, Chris, if you could tell us a little bit about your clients and about that book you wrote too, book you self-published.
Sure. So you already mentioned a good, you already sort of gave the spiel for who I build my tax firm around. I really work with anyone who would call themselves a creative entrepreneur. So editors, authors, photographers, digital designers, small publishing presses, all of them are people that I'm thrilled to include among my clients, along with your other kind of random people. That probably about 65% of my firm is built around the creative entrepreneur, which is cool because there are a lot of so the IRS has pretty clear rules, but how they apply to the creative entrepreneur can be pretty challenging to understand. So that's why I'm thrilled to be able to offer that service with the expertise that I have. To touch quickly on the books that I read. I've written a couple of books in the chronic illness and mental illness space, so wildly different from taxes. Yeah.
And are those a nonfiction or a fiction?
Oh, they're both nonfiction. Fiction scares the heck out of me. I don't know if I have what it takes.
There's only one way to find out.
Push the fucking button. First write it and then push the button. But
all of my friends keep telling me, "Oh, I think you have the imagination for it." I'm like, you don't know me that well. No, so the most recent book that I published is called Whispers in the Pews: Voices on Mental Illness in the Church. It's actually a collection of, I think, 17 essays from different people, sort of talking through their experience with either themselves or a loved one, and sort of how the church did or didn't help them with a mental illness. A good mix of some good stories and some really terrible stories, with the idea of starting a conversation around how those in the mental illness community can be better supported by communities of faith.
Yeah, so it's a book to kind of raise awareness, but also to get the dialogue going.
Absolutely.
Things that we can do better.
Yeah.
I'm really glad you wrote that book, that you brought that book together, that you published it and put it out. That's awesome.
Thank you.
So in writing that book and in working through people's taxes, what have you learned about the best ways for us to, as authors and freelancers, to get our taxes together, to keep track of them, to get ready for tax season as they come up?
That is a super broad question. I'm going to try and address a couple pieces related to that. The first and the biggest thing that I would say is don't wait until the end of the year or after the end of the year to start thinking about it. You know, I talk a lot. I do some teaching at some writers conferences, and that's one of the things that I spend a lot of time talking about. Like, you know, at least once a quarter, depending on how much expense you have sort of coming through, you know, maybe once a month, you want to sit down and sort of just get yourself organized. You know, you don't want to be trying to find that receipt from last February a year from now. You know, that no one, you know, unless it happens to be an email receipt, no one is really going to be able to do that well. The other thing I would mention is I'm a huge fan of digitizing everything. I'm very anti-paper. I run a mostly paperless firm, and I'm a big fan of, you know, trying to avoid having to keep that scrap of paper. I still have a couple clients that bring me local clients that bring me a box.
The shoe box of horror.
I'm like, oh no, this is the year that you're going to be a former client, I swear. So there are a lot of tools to sort of digitize things, and the thing that's nice is that a couple years ago, the IRS decided to join the 21st century, and they now accept, in the worst case scenario of an audit, they now accept digital receipts in lieu of an actual paper receipt. So
good.
Google Drive, Cam Scanner, there, Dropbox, there are any number of tools that would allow you to not have to keep that piece of paper all year.
I've started taking pictures of receipts like that, and then I email them to myself, and I put all of my tax stuff in one folder on my email, and that's not super organized, but it's been working.
And I guess that's the other thing I would say is, a lot of authors that I talk to or creative entrepreneurs that I talk to when they're just getting started, they really want to go way overboard. Like, oh, I need to get QuickBooks. I need to make sure that I'm paying quarterly taxes, and I need to do all of these things right away. And there's nothing wrong with simple, like taking a photo of your receipt and emailing it to yourself and keeping it in a folder. Sounds like a good plan. And then at some point import that into, or enter it into like an Excel spreadsheet or a Google Sheet, and that works just fine.
So going off of what you just mentioned with the filing quarterly, we did have a question in the chat from William Joseph Roberts. He asks, when you have zero income as an LLC, is there any paperwork that should be filed quarterly, or just when you have income rolling in?
So quarterly taxes, I'm going to operate under an assumption that he has a single member LLC, meaning he's the only owner of it. Single member LLCs are what's, I'm going to do my best not to talk accountantese here. So, and when I have to, I'm going to translate it into English. A single member LLC is what's called a disregarded entity by the IRS. What that means is, as far as the IRS is concerned, it doesn't exist. So there isn't a separate tax return that needs to be done. There aren't any separate filings that need to be done. So then the question shifts a little bit to, when do I need to file quarterly taxes? Or if I've earned nothing, do I need to file quarterly taxes? The short answer is no, you don't. Let me explain a little bit why. The IRS's expectation is that 90% of the tax that you're going to owe at the end of the year will have been paid either through quarterly taxes or through the taxes that are taken out of your payroll if you have another job. And it's only when it seems like you might not reach that 90% that you need to worry about it. But even then, don't worry too much. Let me explain why. The dollar amounts there is a penalty, but the dollar amounts are negligible. I had a client a couple of years ago that had $75,000 in untaxed income that we were dealing with at the end of the year, and the penalty for him for $75,000 was $90.
Oh, that's like not bad at all.
Yeah, so we're talking tens of dollars, folks. So it's okay.
William, he did mention it was a partnership. Sorry, Lauren.
Okay, good. So with a partnership, the same guidelines are going to apply. The distinction is that there would be, of course, probably a Form 1065 that would be filed. So just a different tax form, a separate tax form. And partnerships actually don't they don't pay taxes directly. The income from the partnership flows through to the partners within the partnership, and then those partners are liable for the taxes. But to answer the question, the specific question of if there's $0, do I need to file anything? Absolutely not. The government takes pieces of what's been earned. If nothing's been earned, they have nothing to take from. I know it doesn't always feel that way.
Yeah. All right,
Did I cut you off earlier?
Oh, no, I was just thinking, okay, so I could either stress out about taxes 4 times a year or pay a relatively small fee for only having to stress out about them once a year.
Right. Yeah, like that. I mean, this is definitely a general guideline, but the guideline that I give my clients is unless you're hitting minimum $15,000 in profit, so income minus expenses, then I would say not to worry about it. You know what once
As
you
far
hit,
as filing, or
don't worry about the quarterly taxes.
oh, okay.
It's really
So
at that point that it's going to be significant enough where it's going to be less stressful to sort of break up that dollar amount.
so I'm gonna
the juice would be worth the squeeze.
So I was gonna interject before we get on to question 2, kind of tagging on to, because you mentioned dollar amounts. Bart of Today had asked, and I'm also interjecting myself, I'm gonna try and get as many of the in-chat questions as we can, because that's definitely, you know, certainly what people really want to know. So Bart of Today is asking, how much income per month should you have before you report your income? I'm not sure where you're reporting it to or what have you, but that's his question.
Okay, so I'm going to operate again under the assumption that when he says reporting, that he's meaning for state and federal taxes, because there, you know, he could be talking about sales tax or something else, but I'm going to assume that's not the case. Assuming that we're talking about federal and state taxes, it's actually an annual dollar amount. That the so the IRS says that any dollar amount under $400 is considered hobby income, and you don't have to report it.
So we got a $400 cap.
Right. Now, you know, let me offer a little more detail in that, though. Especially, let me give you a story to explain how that might not always be exactly the case.
We love stories.
One of my clients, he published his first self-published novel like January 17th of 2015. So he had all of the expenses leading up to that, the cover design, the edits, you know, some ads, and he paid someone to update his website because he's like me, one of the people who's sort of scared of CSS code. So he had probably about $5,000 worth of expense in the prior year that he didn't have hit, but and no revenue, no money coming in the door because the book hadn't been published yet. So you could look at that, and you know, according to what I just said, you would say, well, he shouldn't consider this a business because it doesn't have any revenue yet, and he hasn't hit that $400 minimum. But because we knew the book was coming out, and we knew when the book was coming out, we were anticipating decent, you know, $400 over the course of a year for a book isn't an obnoxious dollar amount to expect. You know, so we were, you know, we were able to move forward with reporting a loss for that year based off all the expenses that he had because we knew that a book was coming out. Now the trick here is that you can't say, well, I'm starting this book that I'm going to publish, I don't know, sometime soon. You know, it's a great American novel. Between now and 2030, I know I'm going to publish the book, and I need to travel the world to do it. Like, that's a big no.
But with a hard release date, I know I'm going to release it X month, X day of this year, and then the previous year I've spent X amount of money getting it ready. You can then claim a loss. Now, what exactly does that mean or entail as far as the taxes go? Yes.
Can you repeat that last part? I spoke over you unintentionally.
The filing for a loss. What exactly does that mean? I have no idea what that means. So.
Oh, sure. So on your personal taxes, you would file a Schedule C, which is just a small personally held business, and you would simply record all the expenses in. There's about 13 or 14 different categories that the IRS wants things to fall into. You would list those expenses, and then it would total up to a loss, and then that loss would be a reduction in your taxable income. It's kind of that simple.
Oh, okay. So they don't take quite as much from you? Is that what,
right?
In layman's terms? Okay.
Right.
Okay.
Yeah. So if your W-2 showed that you made $50,000 and you had a $4,000 loss because of that scenario we just talked about, then the starting income that would be considered taxable income would be $46,000.
Ah, very good. All right.
Yeah. No, I
Like
need to mention something directly related to this. You can't claim losses indefinitely.
Yeah.
The government's like, hey, this seems like BS here. Come on.
You're gonna get an audit. This person, it's been like 5 years now.
So usually how it looks is if you're able to claim a loss 3 years in a row, and then that fourth year they need to see some sort of income.
So is this like a book you've been working on for 3 years and you haven't published yet? Maybe you're doing a lot of traveling to research it and you still haven't published it. Is that what you're talking about?
So a lot of that story applies mostly to people who are looking to be traditionally published as opposed to self-published, because you might have, you could have expenses. It might take 4 or 5 years between when you quote finish the book and when a publisher picks you up. In the indie world, it's the barriers to getting your book out there are far less. It's more just about learning the process. But yeah, I think a lot of it has to do with some of the. I'm going to jump to another question. One of the questions that we talked about was, what are the types of things that you can write off? Depending on how actively you are, for example, going to writers' conferences, that the travel and the registration associated with that, it would be considered tax deductible. So you could have a scenario where your book has been published and you have revenue, money in the door of about $1,200. We'll just throw that number out there, $100 a month, and then you go to a conference that's cross country and it ends up costing you $1,500. And let's say you have no other expenses. Well, you're recording a loss of $300 at that point.
Sure.
That makes sense?
Yeah, so then that year you would file for the loss, and then your total income would be that they could accrue for taxing would be $300 less than you would think.
Right.
Because of the loss. Okay.
Right.
Okay. Now the next natural question is to kind of go over some of those write-offs, but first we wanted to have a sponsor read.
Right, jumping in there, and I'm just saying a disclaimer because there is a quoted thing in here. I don't know if it's a character, I don't know if it's a real person, and I don't know why I give it the accent that I do, but I do, so here we go. Our show sponsor tonight is Noir Fatale, new science fiction, urban fantasy, and mystery stories with a noir theme from best-selling authors Laurel K. Hamilton, delivering an Anita Blake series story. Larry CORREIA, penning a Grimnoir series adventure, an original Honor Harrington series tale from David Weber, and more. The silky note of a saxophone, the echoes of a woman's high heels down a deserted asphalt street, steam rising from city vents to cloud the street-lit air, a man with a gun, a dame with a problem, noir. From the pulpy pages of Black Mask magazine in the 1920s and 30s, through the film noir era of the 1940s to today, noir fiction has lured many a reader and moviegoer away from the light and into the dark underbelly of society. Names such as Raymond Chandler, Dashiell Hammett, and James M. Cain. Titles like The Big Sleep, The Maltese Falcon, The Postman Always Rings Twice. These have inhabited our collective consciousness for decades. Humanity, it seems, loves the dark, and within the dark, one figure stands out, that of the femme fatale. Here then, Noir Fatale, an anthology containing the full spectrum of noir fiction, each incorporating the compelling femme fatale character archetype, from straightforward, hard-boiled detective story to dark urban fantasy to the dirty secrets of futuristic science fiction, all hard, gritty feel. As Raymond Chandler said, down these mean streets, a man must walk who is not himself mean, who is neither tarnished nor afraid. Because as these stories prove, doing the right thing doesn't necessarily mean you get the big bucks or the girl, but you do the right thing anyway. All new stories by Larry Correia, Casey Azell, Laurel K. Hamilton, David Weber, Sarah A. Hoyt, Robert Buettner, Alistair Kimball, Griffin Barber, Michael Massa, Christopher L. Smith and Michael Ferguson, Hinkley Correa, Patrick Tracy, and Steve Diamond. Click the link and get your noir on. I added that last part.
Yay! Good job, Kaylee.
Thank you.
Okay, Chris, what can we write off on our taxes?
Sure. So I've got a little bit of a list I'm going to run through. The first thing to keep in mind is that if you have a office space, if you have a dedicated space for working, it doesn't even need to necessarily be a full room, then a portion of the expenses that are associated with your home are considered deductible for tax purposes. The one thing to mention there is that it cannot increase a loss. It can bring your revenue down to zero, but it can't bring it lower than zero. That's the only deduction that applies to. The home office is just a weird thing like that. Another big category is equipment for authors. That could be anything from, yeah.
Can you deduct that one first and then go through the rest of your list, then keep deducting and it goes to zero?
I wish.
Oh, okay.
I wish. So actually the way that it's set up it's the last thing that's deducted.
Ah, gotcha. They knew.
Yes. Another big category is equipment. That could be desks, computers, printers, copiers, fax machines, Kindle readers, anything like that. A question that I get asked a lot about this particular category is, well, I don't use my computer only for my writing. Can I still deduct it? Look, there's no such thing as like a one-purpose computer. Like that doesn't happen. Now, if it's your spouse's computer, that's a different story. That's called tax fraud. But if it's your computer, and it's the computer that you use for your writing enterprises, then it's completely appropriate to consider that a business expense.
Not my cell phone. I use it all the time with customers.
Yeah, absolutely. So with your cell phone, there are a couple of different categories. The first is the cost of the phone, so the actual purchasing of the phone, and then the second part is, of course, the monthly fees associated with it. The cost of the phone, the same concept applies. You can deduct that in full. Again, as long as you're legitimately using it.
Mm-hmm.
You know, as an editor, you know, especially, it makes sense. Like you have to talk to your clients at some point. An email doesn't always cut it. Right. Especially when you're like trying to get a new client. Like there's probably going to be some sort of telephone conversation. And then as far as the monthly cost, what I advise my clients to do is you can't write all of it off, but whatever, you know, take a test month and look at, you know, estimate what the percentage is of the time that you use your phone for business versus personal. So for me, I write off about 50% because that's about what I use it for. About 50% of my time over the course of a normal month is with clients, and 50% is Facebook and Candy Crush. Just kidding.
No. I have my Facebook games that, yeah.
Yeah.
Well, thinking about February when we worked on my taxes together, that sounds about accurate.
Yeah. Another category is, of course, contractors. So anyone you pay to help you develop your book, editors, cover designers, in anything else that might fall into that category, you can of course deduct those. Travel is an interesting one because there's a couple different ways to talk about travel. I had a client who was writing a book that was based in current day Russia, and there's only so much you can learn through Wikipedia. So she went to Russia, and a decent part of what her travel expense to Russia was considered a tax write-off. Now her scenario was, slightly different because she was traditionally published, but it still falls into that same category. If she knew the book was going to happen, she had a release date, and it was, it wasn't something she came up with on flights to Russia. So research trips, if it's legitimate, if you can with a straight face dialogue with someone about it, in other words, then a piece of what your trip is going, a piece of your trip would be considered deductible. It all depends on the details.
How do you figure out the piece?
So with my client, we had to walk through, like, where were the places that you went that were related to research for your trip, and what was the stuff you just had to do because you were in Russia. It had nothing whatsoever to do with her book. The things that were touristy, we couldn't write off. Her husband went with her, so all of his expenses we couldn't write off. Although specifically the hotel, we could write off all of it, because whether you're one person or two people, you still need to sleep somewhere, not outside. Like the hotel was still legitimate.
Sorry, you guys sleep in the streets. I need to make this a tax write-off.
Right. So this is one of those scenarios, going back to the disclaimer, where it really is sort of a case-by-case basis. I would want to, this is one of those few scenarios where I would say if you're looking to write off a research trip, you should at least have a conversation with a tax professional to make sure that it passes muster. And I've had pretty detailed conversations with people through, kind of walking through their research trips, or what they called research trips. One guy, I was like, dude, that's just a family vacation. He's like, all right, it was worth a try.
We had a question from chat, William Joseph Roberts. This kind of goes back to the phone write-off, the cell phone write-off. Does Facebook, Twitter promotion count toward the write-off percentage? A lot of authors spend a lot of time on social media marketing.
Absolutely. So not only would any time spent on the phone, for building out a promo be considered going toward that percent, but in any advertising expenses, the Facebook ads, the ANS ads, purchasing an ISBN number, all of those things would be considered deductible expenses. They fall under the general category of advertising. Something else that is a big area that I find people miss a lot is software expenses, and that that would include if you have a Microsoft Office 365 subscription, the cost of your website, anything that you're purchasing that is a software tool that helps you to do your job as an author is 100% deductible. In the editor world, that might include things like Grammarly Premium or Perfected, are a couple tools that I know of that some of my clients use.
I've heard Jim Butcher once say in an interview that creative inspiration counts. So he would write off like movies, computer games, like all that stuff, because he would use that to kind of replenish the creative well to write more.
So that's pretty creative. I would need to. So let me give you an example of a client I have where I'm totally comfortable with this. She is looking to transition from being only an author to being an author and a screenwriter. So in that scenario, she's like, hey, I want to watch movies and sort of understand the production value and the way that the dialogue is sort of put together so that it makes sense. That creative inspiration outside of that context, there are, I give a hard maybe to that. It has to be reasonable, and I'd want to have a good conversation with the person who's suggesting that, because there are, I'm sort of trained to think worst case scenario, and part of what that means is thinking about an audit. So I have to be able to, either me or the client has to be comfortable saying with a straight face, I watched Friday the 13th Part 7 to inspire me to write my fantasy novel. Like, maybe not. But there are always people who are comfortable taking more or less risk. I tend to be sort of, I'm, if this is center and this is way liberal, then I'm sort of right here. It's, the way that Jim is talking about creative inspiration, I put that more a little farther toward, maybe having some more audit risk than I'd personally be comfortable with. But this, to be clear, this is an area where you ask 10 CPAs their opinions, you're going to get, 7 or 8 different answers. Yeah.
But you're kind of thinking of, if I have to sit down in front of the IRS and have a conversation about it, what can I really stand behind?
Right. And here's why you're going to have different answers, because the IRS guidelines are this. Anything that's reasonable and customary within your business can be deducted. That's really undefined and really unhelpful. Thanks, IRS.
Just throw a yard out into the ocean. That's deductible.
Right. I will say this. If you're writing in the horror realm, for example, then purchasing other books that are in that horror realm or going to watch horror films, that is directly related to building your craft. That I'm okay with.
Mm-hmm.
But if you're going to see a movie every week and you're calling it creative inspiration, I'm calling BS on that. Just personally. Again, a different CPA might have a different opinion. To me, there has to be a direct line between whatever your craft, the specifics of your craft are, and the way that the money is being spent.
That makes sense.
Any other kind of write-offs you can think of?
There's general things like supplies, whether it's paper clips or postage stamps, are going to have certain types of expenses that are going to come up. If you end up going to some sort of writerly event, whether it's a conference or just a meetup, the mileage to and from is something that can be deducted. That's something that people miss often. Especially I have some clients, like there's a conference that's been happening in St. Louis for the last couple of years. I know people that drive from Idaho or from California to get there. I'm like, hey, at least Google map your mileage so we can include that. Those are the things that pop up in my head that I think are relevant. One other area that I just thought of actually is anything that's sort of education related. So that would include buying writing craft books. That would include taking a class, a master class on Facebook ads or AMS ads. Anything again that's going to help you do better at running your creative entrepreneur business, your author business, is definitely going to fall into that category. And goodness knows there's enough classes out there that it's pretty, it's nice to know that those are business deduction.
Right. Yeah, there's a lot of good classes out. Yeah.
Yeah.
We had a question that's similar. So purchasing books for reference and research counts?
Absolutely. Yes, for sure.
Now, what if buying a book at a con and the author isn't doing receipts?
I forgot to say.
So you buy, you're at a con, you buy a book, you think it's going to help inspire you in your writing or it's part of your research, but the author doesn't give you a receipt. How do you record that, or keep track of it, or prove it, or?
So I'm operating under the assumption that it's a cash purchase. But first, if it's not, then whatever it flows through on your credit card receipt, your credit card statement or your bank statement, just highlight it, no receipt provided. If it's cash, then sort of a similar thing, right? It could literally be like a post-it note: purchase this book on this date for this much, no receipt provided. That would definitely be an example where you want to take a photo of it.
Look, I'm at the con. Here's the book and a post-it note.
Right. Yeah, something like that would be fine. Just some sort of documentation of it.
Another question on the chat from Shadow the Illustrator. I know in my state you can only file 3 losses as a sole proprietorship until you make a profit. What amount paid would be worth? Oh, did we already cover this? What amount paid would be worth filing losses, and at what amount of profit do you file tax?
I think, yeah, I was gonna. I got distracted with what he was saying. Yeah, that would fall under like that $400 like wave. I'm gonna call it a wavy cap. I'm gonna kind of try and like reword her question a little bit. So how far above 400, I guess you should say, in that year of profit do you want to file tax? So like if you make $401, you want to file for that?
Well, I think keeping in mind that profit is money in the door minus expenses.
Okay.
So if it's $401, you have to file it.
Okay.
My read of that question was sort of the opposite, which was how much of a loss it is worth filing, given that you can only have 3 years of loss in a row.
Okay.
I mean, that's sort of a judgment call. It's dependent on. I mean, at the end of the day, it's dependent on what your tax bracket is in terms of what kind of tax savings you're going to have. I would say, generally speaking, I try because there is that limit on you can't file a loss more than 3 years in a row before the IRS is going to either A, audit you, or B, say all of that was hobby stuff and just charge you extra money for the taxes that you thought you saved. My guideline, again, emphasis on the word guideline, is if you have expenses that are somewhere $3,000 or more, then it's probably going to make sense to consider filing it. If your only expenses for that year are paying the hosting for your website and paying $39.99 for some plugin for your website, so it's $70. Man, just hang on to that. Don't bother. I hope that helps.
Yeah, that's good. Now, for authors who haven't done this before, and we need to keep track of our expenses. Say we go to a Word document, we open up a table, and we make columns in the table to keep track of our expenses. What kinds of things should we put in our columns? What should we be keeping track of? What information do we need later when we do our filing our taxes, or when we send them to someone like you to do them for us?
It's a good question. So the first thing I would suggest is probably, sorry to be a nerd here, use Excel or
Excel.
It's not Word, because it's just easier to do some basic functions that will be helpful later on. But to answer your question directly, you'll want the things that you would expect to see on a bank statement. So date, vendor, dollar amounts, and then some sort of description or a category at least. And then, yeah, I would say category, and then another as one column, then description as another one. Meaning, you have to be able to, you might need to be able to tell the story behind why a specific expense or a group of expenses are really tax deductions. A real class, and so I don't mean write a novel, but going back to if you're going to a writers conference, you're going to have things like airfare, you're going to have meals, hotel, and all of those things. You need to have some sort of reminder to yourself what those are related to. So the description would be as simple as, whatever the conference was, Railmakers 2019 conference. Just as a reminder, because you could be audited up to 7 years later, and good luck remembering what happened in 2019 and 2026. So that description category is more for those things where you would need to tell a story. I hate to use that phrase, tell a story, because I always think fiction, and then I'm like, fiction and taxes. This is a bad combination. But you understand. Being able to sort of describe the reason behind the expense. Those would be the things that I would include.
So you definitely want to keep, because I've heard it before, and then it's like one of those things that just kind of like went right back out my ear. But you definitely want to keep up to 7 years in the past of those things that you are keeping track of. So the photos of your receipts, the taxes that you did file, the categories in the lists that you're making, make sure they're separate. 2019, here's all that went on. Now we're in 2020. As soon as you get to 2027, can you get rid of 2019 then?
Correct.
That would be,
okay. Yeah.
Well, you want to keep it somewhere, right? Just in case you get audited in 7 years?
Well, that would be the 8th year.
I was going to say, her example was the 8th year.
Oh, sorry.
So then at the 8th year, you can get rid of that hanging thing, so less. Especially if you're a shoebox holder, and you have 7 shoeboxes, you don't want to have 20,000 shoeboxes.
Right. I mean, it's a lot easier if you are digitizing things and you can throw it into Google Drive or keep it in your email or, Dropbox or whatever, something like that. Then it's not as difficult to keep. That's part of the reason I'm a fan of digitizing, is because it's a lot easier to keep a file than it is a file folder, like a physical file folder.
Yeah.
We have more questions on chat about this topic of write-offs. William Joseph Roberts asks, what about the cost of going to a con if you're going for a networking and promotion, but you don't have a table set up for sales? This actually I did last month, so you'll get to figure that out for me.
It actually it falls under that broad category of education that I talked about, because you're still going to be learning things, and there's still going to be benefit for you that will improve your craft as a writer. It's okay to not have a table set up or not be selling things. That doesn't change the answer.
So, for example, because I know it's coming up later this year, the 20 Books to 50K Vegas conference this year is, just that kind of conference. There's going to be 1,000 authors there that were there to listen to panels, that are specifically talking about writing and all the things in between it. There's a lot of time set up for networking specifically with, other authors. So, your flight expense, then your hotel fee, the food that you eat, you can write those off. But if you go see the Blue Man Group, probably not going to be within the tax write-off, because that would be considered something personal, not directly related to your writing. I guess I ended up with a question.
Everything you said is right. I want to add a couple caveats just for clarity. That the food is 50% is considered 50% deductible. You would, and then the Blue Man Group, even if you were going with a group of writers, you still wouldn't be able to write it off, because part of what changed with the tax code, with the big Trump tax change, is that all of entertainment is considered non-deductible at the federal level.
Yeah, I kind of assumed that.
What if it's in your book? You include a Blue Man Group thing in your book.
Well, then you got to think about copyright laws. Can
Right.
you do
Well,
that?
but I'm saying, like, what if the entertainment that you do is part of your research?
You need to study their movements and the light patterns, so you can write them properly.
That would be an interesting conversation going back and forth with a client with that specific one, because my argument would be, well, you could probably figure all that out by looking on YouTube.
Oh, okay. Yeah, because I think there's going to be an axe throwing group and a going to the range group and a shooting bow and arrow group. So
those would be more.
Writers.
This is the entertainment of your conference, but
Right.
Okay.
Yeah.
All right. More questions from chat. Bill asks, what about multi-business expenses? For example, a day job. I expense some software, computers, travel. So I guess you're using it as an author, but you're also using it for a different business. What about that?
I'm not quite clear on the question there.
So, like, okay, I'm going to use myself as an example. So I have a day job where I am an employee of somebody else's business,
yeah,
but I still have my authoring business. So he expenses some of the software, the computers, and travel through his day job business, but it's bleeding into the authoring business. So he might be writing at work using their computers. He might be traveling through the business of his day job, but then can do something specifically writing related through that travel. So I guess, how does that bleed over?
Okay, so generally anything that is a reimbursable expense from a regular job is not something that you'd be able to then claim as an author expense, because your day job is already basically taking care of it. It's almost like claiming the same thing twice.
Okay, so you're using it at a job where you're already being paid, so you can't do it twice.
Yeah, I'm assuming, like with the travel example, like, you know, my previous job, I was a management consultant, so I traveled all over the nation, but none of that was on my dime. I had a corporate credit card, and then you know, that was sort of taken care of. So I wouldn't, even though I would be, you know, in a hotel room in the evening doing my writing, like I couldn't claim the hotel as a business expense because my day job was paying for it.
So with that, he did have a clarification. What if his company does not reimburse him? So he's paying out of pocket for these programs and these trips. Yeah, oh. He said, I purchased my own computer to use at work and writing. And what if the company does not reimburse me?
Yeah, then go for it.
There you go, Bill.
Yeah, I'd be comfortable with that.
Yeah, if your company is not reimbursing you, then you're not doing it twice.
Right.
Okay, so we talked about keeping track of your expenses. What about keeping track of your earnings? So what would be a really simple way to keep track of your earnings as an author? And what sort of things should we be keeping track of?
The revenue side is generally, I mean, most of that is going to run through, and I'm assuming is going to run through an online retailer. So Amazon or BNN or Kobo or Smashwords or something like that. And you know, they get, all of those have pretty decent reporting mechanisms. So you know, I would say just lean into those. The other aspect is having live events. You know, going to some sort of expo or some sort of con and having a booth and selling. I have a bunch of clients that do that as well. You know, ideally with that, you know, I shouldn't say ideally with that. My experience with that has been that most people aren't paying cash, so you're going to have some sort of Square reader, or the PayPal reader, or some version of that that you're going to run your transactions through, and then again, you'll be able to pull the reports from those transactions. To the degree that there are cash transactions, sort of the same thing that with the example of buying one that someone didn't give you a receipt for. Just keep track. And usually the easiest way to do that is kind of, what was your inventory when you started? What was the inventory when you ended? How much were you selling it for? Do the math.
And then the cost of the book to you, that's a write-off?
Right. Yeah. So one pleasant change from for the Trump tax code is that as authors, we don't need to keep track of inventory on hand and account for that on our taxes any longer. At whatever point you purchase the books to sell for yourself at these live events, you record that as an expense. It's literally under the cost of goods sold category. There's a line item in the Schedule C that's called purchases. That dollar amount would go there. And then at whatever point you sell your books, that's just your sales.
That makes it easy.
Yeah.
Okay, so we have another question in the chat from Shadow the Illustrator. She says, I have my EIN as a sole proprietorship, but as a freelancer, is it best to apply as a sole proprietorship or an LLC?
That's a good question. The first thing I'd say is I'm glad that you set up an LLC because or that you captured an EIN, because otherwise every time someone asks you for a W-9, which they may ask you for if they're going to give you a 1099 at the end of the year, you have the privilege of somehow sending someone your social security number without it being compromised. That's challenging in the online world we live in.
So for those, before you answer the rest of the question, for those who might not know, what is an EIN?
Sure. EIN is an employer ID number. It is for a business what the social security number is for a person. It's a unique government issued ID that says that says this number is for this company.
Okay.
In terms of the difference between having it set up as a sole proprietorship or an LLC, some part of that is dependent on state regulation. Because the LLC is set up at the state level, because some states hate small businesses, it really depends on where you live. Let me give you an example. If you're living in California, I would tell you not to set up an LLC because it costs $800 every calendar year for the privilege of having a business that is an LLC or an S Corp in the state of California.
What about Idaho?
I don't know Idaho's regs off the top of my head. I don't actually. Wait, let me think. There isn't any state level regulation that would cause me to tell you that you wouldn't want to set up an LLC. This sort of segues to a question of what's the benefit of having an LLC? Mm-hmm. What are the pros and what are the cons of having an LLC, which was on our nifty little list. So I figure I'll just attack.
Just tackle in there.
So that the primary reasons that you want to have an LLC are to protect yourself from any sort of litigation, and to protect yourself from great financial loss. Let me dive into those a little bit more to explain them, and then you'll begin to see that a lot of authors don't necessarily need an LLC, because neither of those are going to necessarily apply very much.
They might apply to freelancers.
Potentially. Let's talk through them, and then we can, you can sort of draw your own conclusions. So that the litigation piece is, it applies a lot more to to companies that have some sort of product that might malfunction. So the classic example that I could give you would be a lawnmower company where one of the blades of the lawnmower randomly flies off and causes major damage to someone's foot. So in that scenario, if there was an LLC set up, then only the funds that were associated with the LLC would be available for the pending lawsuit that we know would come. So the person who actually owned the company wouldn't have their personal assets available. So let's try and apply that to the writing world. Like, unless you're just straight up plagiarizing someone else's work, or you're writing thinly veiled, political satire, with Donald Trump or something like that, where there's risk of someone suing you for libel or slander, that the likelihood of there really being any litigation for us as authors is really small. So that concept of protecting our personal assets isn't super applicable for the most part. And then the other part, the other piece is to protect us from great financial loss. That has to do more with companies that take out a huge amount of debt in order to establish their business. I'm hoping that there's no one watching this who is an author who's like, I took out $100,000 because I'm going to get rich as an author. Because, well, yeah, like that
doesn't happen for everybody, but
it's probably not going to happen, except for you, Caitlin. Of course, it'll happen. For you.
Well, thank you. My fingers are crossed, man. Hard.
But companies that finance through a lot of debt will want to establish some sort of corporate entity, so that if it doesn't work, that their personal assets are not brought into the mix when debtors come calling.
So for like the cover artists, the non-authors within the what did you call them? The
creative
legal term. The creative entrepreneurs. So for like the artists, for the LLCs versus sole proprietorship, does that still apply similar to the authors, or does that take a different spin?
The only thing I would say in that case is just make sure that you have some sort of contract with everyone that you work with that basically says, hey, we agree that I'm an artist and I'm going to do the best that I can to meet your, what you're looking for. There are X number of versions of the cover I'm going to give you at no cost, at no additional cost. And then anything past that is going to cost X. Just really lay out expectations. I think that contract language can cover most of that. Where I worry is I have a couple book cover designers. I've been trying to convince them for years to use contracts, and they're like, no, I'm good. Like, no, you're not.
It only takes one.
Right, exactly.
Same thing with the editors in the audience. Contracts, they're out there. You can find them on Google, use them. And authors, when you look for an editor, contracts.
I mean, and as far as like contracts go, I mean, it can be as simple as this is the editor or cover artist. This is the person who's purchasing. Here's what the cover artist or editor is doing. This is what it's costing. This is the expected amount or expected date for payment. Mm-hmm. It can be that simple, I'm assuming.
Yeah. I mean, the sample document that I send to my editors who are not using contracts is like a page and a half. And most of it is, I mean, it's not much more than you said. It's just basic, this is who I am, this is who you are, this is what I'm going to do, this is what it's going to cost, this is when it's due. If you want this, it's going to cost more. Something like that.
Yeah, but just it's also nice because it helps you to communicate with your editor, or if you're an author, or communicate with your client if you're an editor, and just it'll really lay out what all the expectations are, have it really clear what services the author is looking for, when they want it done, have it all written down in words so that both parties understand. It's really helpful. And then good on the tax side. We're a little over the hour. We had a whole lot of questions though, and fantastic questions from the chat. Yeah, thanks everyone for participating. Just wanted to check over real quick. Are there any other questions we're missing? Oh yeah, are there other ways we can save on our taxes aside from write-offs? I know that there's like a savers write-off thing with Roth IRAs or something.
Oh, so there's a whole, we can have a whole nother conversation, will last another hour, on ways to save on taxes outside of sort of just keeping good track of your revenues and expenses. A couple quick hits that I would say: a Roth IRA is a good one. It's one of the few benefits you can have after the year ends. Like if February or March comes and you're like, oh, I don't want to pay that much in tax, but I have money sitting around. You could go open a Roth IRA anytime before April 15th, and it'll still count for the current, I guess it'd be the previous year's taxes. So that's a good one. It's hard to give a quick answer on that one because there is a lot that sort of goes into tax. Charitable
deductions.
Well, one of the things that's interesting about that, so another change that happened with the Trump tax code is the standard deduction was doubled. I'm going to try and explain what that means. So everyone either uses the standard deduction or they itemize their deductions. When you itemize, that's when you include things like mortgage interest or charitable contributions or state taxes paid, things like that. But that you only want to itemize if the things you're itemizing are greater than what the standard deduction would be. For two reasons. Number one, it's easier. Number two, it's stupid to say government take more of my money. I probably put those in the wrong order. What I found this year is that a lot of my clients who in previous years were itemizing, this year we're doing the standard deduction, just because it was doubled, because the dollar amount was doubled. So things like charitable contributions, well, there's always non-tax, sort of softer, feel-good benefits to it. Depending on your circumstances, it may or may not actually be beneficial for you from a tax perspective. The other thing I would say is look at your state regulations. In my state, the state of Arizona, for example, there's a dollar-for-dollar tax deduction if you give to schools or if you give to charitable foster organizations. So the money is still going out, but in Arizona, you get to decide, would you rather give it to a foster organization or the government? So it's not really a hard conversation, not really a hard decision.
Right.
And most states have some sort of designation, some sort of state specific, I don't want to use the word loophole, program that will allow you to gain some benefit.
And then another question from chat. William Joseph Roberts asks, since an LLC is basically passed through for the cash flow, is there a good way to reinvest in the company to benefit the company and individuals? I don't know if this is a follow-up question. If we host a charity anthology, would that be a write-off if all the profit is being donated?
There was a lot in that question.
I only understand like half what these questions are saying, so that break it down.
The first question of is there a way to reinvest it? So what sort of the short answer is, anything that is shown as a profit is going to be taxed. Sort of what you do with it after that, you're never going to be taxed on that income again. But there isn't a way to avoid being taxed on the income that flows through as an LLC, other than spending that money within that calendar year. So an example would be, so say it's the end of October and you sort of look at your books and you're like, hey, I've got a $6,000 profit. If there's something you can do that makes good business sense and would allow you to invest some of that money back into the business, then that would be the time to do it. So, a simple example might be, instead of buying one ISDN, I'm going to buy 100. It'll cost me more, but then I'll have those, I have the funds and I'm reinvesting in what my future business is going to look like. And the government's not getting a piece of it. I'm not a fan of spending money just so the government doesn't get it if it doesn't make sense for your business. No. That just doesn't make sense to me. We have to have a broader picture than just, I don't want the government getting my cash.
Makes sense. Yeah. So then the second question is, if we host a charity anthology, what about that? Would be a write-off if all profit is being donated?
If it's being donated to a
charity.
If it's a 501c3 charity, then that would be that would essentially roll over to the it would roll up to the owners as a potentially itemized deduction.
Okay. So the owners of the anthology would get to write that off.
Right.
It's a donation.
That makes sense.
We had comments from the chat. Jay Clifton Slater says, Chris Moore's CPA, awesome job in breaking down the complicated into simple language. Thank you.
You're welcome.
Bill Frisbee says, awesome show. Thank you.
I'm glad I was able to help out and, mostly make sense. Kind of keep it English, like I said.
No, you did a great job because, tax lingo, that kind of jargon is just like up here somewhere in my head and just don't really understand it. But yeah, no, a lot of that makes a lot more sense now.
Cool.
So yeah, thank you so much for coming on. Not seeing any more last minute questions. And I think we pretty much covered everything on our list. We never cover everything on our list. That is amazing. All right. So, all right. So I think I'm gonna end it because, all right. Yeah. So thank you so much for coming on the show, Chris.
Yeah.
Is there a way that our viewers, listeners can get a hold of you if you want them to get a hold of you, where they can find you and your work that you do?
Yeah, the easiest place to find me is on my, it's chrismoorecpa.com. And then you can click around there a little bit. There's a section that's devoted to creative entrepreneurs. And if you want to set up a time to talk, I'd be happy to do that with anyone who's listening.
I'm officially going to coin that, by the way. I mean, can't really coin it, but oh yeah, what do you do for a living? I'm a creative entrepreneur.
Doesn't it sound so much more legit?
It does. It does. I'm so
struggling, whatever.
Well, it's what we are. It is. We're creative and we're entrepreneurs because we're taking those risks. We're starting our own business. This is us.
Yeah.
Hear us roar. All right. To everyone in the live chat, thank you so much for hanging out with us. Seriously, your guys' questions were amazing and on point. Let us know what you thought about the show in the comments. Make sure you hit the subscribe button and the bell so that you can so that you know when we're having a show on next. Make sure you hit the thumbs up button. And we're going on. For Lauren Moore, I'm Kayleen Williams. Thank you so much for joining us on your writer's journey, especially through tax season. We'll see you next time. Talk about some reading, writing, and everything in between right here on Keystroke Medium.